In the race to save our planet, venture capital is missing something critical.
Mitigation that can mitigate the emissions of CO2, half by 2030, half again by 2040. Adaptation, you might not achieve those targets. Today, 94% of venture capital dollars going into climate is going into mitigation.
That blind spot is becoming dangerous as climate chaos accelerates around us.
We will need to start adapting. I mean, the hurricane season in the US being a great proof, right?
The stakes couldn't be higher. This isn't just about sustainability, it's about survival.
Billions of units of air conditioners to keep people alive.
How do investors navigate this trillion-dollar frontier? 2150's Christian Hernandez offers a clear framework.
So all the different problems we've looked at across adaptation. What's the problem? What's going to get solved by infra? What areas of solutions still need innovation?
And here's the twist. Doing good might be the smartest investment of all.
So Bill Gates and Ban Ki-moon wrote a paper, 1 trillion yen to climate adaptation will generate 3 trillion of economic value.
The future demands we move beyond silos and solve this together.
Come to us for deep dives, and we share quite openly. We might need to back a dozen different solutions for one of them to win, or maybe we need to deploy all 12 at the same time at scale.
Join us for a crucial conversation about the most overlooked investment opportunity of our time, where survival meets returns and adaptation becomes the new frontier for climate capital.
Welcome to the Impact Highlight series powered by EUVC, Impact VC, and Impact Supporters. I'm August Solo, your host of this series, and I'm a previous Impact VC investor, as well as the founder and author of Impact Supporters, which is a newsletter and podcast in the impact venture capital space. Today, I'm super excited that we have Christian Hernandez with us. He is the co-founder and GP of 2150, as well as a big systems thinker, and has put a lot of reflection into sort of this decision between climate mitigation and climate adaptation. I think I have really 3 things that stuck to me after the conversation. Firstly, an interesting fact that Christian brings to the table is that 94% of climate VC dollars today go into mitigation. He believes that adaptation will grow and grow, and so that number will be reduced. Secondly, if you believe that climate adaptation is one of the next steps in climate VC, then we need to think about the success criteria around climate adaptation. For climate mitigation, they're clear. It's CO2. But for climate adaptation, it's more unclear. It could be reducing wildfires, reducing floodings, and other sort of climate change reactions. Thirdly, which a fact that's super interesting for a fund like 2150 that's focused on the urban climate tech stack, is that if you look at the megacities of tomorrow, of the 22nd century, they're not even created today. So we can already adapt those before they're created. So make them more sustainable, efficient, and resilient. So I hope these facts also sound interesting to you. At least this conversation was super, super interesting to me and our community. So please listen along and tell us if you have any questions.
Here's a few words from our beloved sponsor. Impact VC is a global community of VCs accelerating impact within venture. Their purpose is to cultivate a community and resources to unlock venture capital's ability to tackle the world's most pressing challenges. The community is made up of over 900 VCs, including both pioneers and newcomers, including generalist VCs and impact specialists. Visit impactvc.co to join the community and explore their resources, including the VC Impact Playbook, the Founder Impact Playbook, and the Impact Investing for VCs online training, which is designed to help VCs integrate impact practices into their investment strategies.
That's a lot of information to get in 30 seconds.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Great. Welcome, everyone. I'm super excited for today's episode because we have Christian with us here today. Welcome, Christian.
Thanks for having me, and thanks for the series. Super excited about it.
Yeah, super nice. It's super cool that we're having this chat because I think the topic we're talking about today is super key in sort of the transition. And maybe for the listeners out there today, what we're talking about is sort of the difference between climate adaptation and mitigation, and the process of where we are now in that split, and how sort of VC money is going into the different categories. and where we should be putting VC money as well. I think we'll just start off right there, Christian. Maybe can you give us a little bit of a feeling of what's the two different groups, what's the definitions, and what's the status and where we are in the journey?
Yep. So mitigation is the belief that we can deploy solutions that can mitigate the emissions of CO2. And we have certain milestones on how much we need to reduce, right? We need to cut our emissions in half by 2030, half again by 2040, net zero by 2050, try to achieve 1.5 degrees. Adaptation is the unfortunate realization that we might not achieve those targets and the temperatures might continue to increase, that certain planetary boundaries might get crossed, and that the world will start being to adapt to climate risks to make it survivable. Both need to happen in parallel, but today, 94% of venture capital dollars going into climate is going into mitigation, or rosy glass belief that, yes, we can fix this. My argument is that in parallel, we also need to start thinking about adaptation as more and more bad stuff starts happening more and more frequently. There's been a growing conversation around climate tech venture capitalists around what adaptation might actually look like and what type of solutions venture capital could back compared to other types of capital.
I think that gives a good overview. And so what you're saying is that there's already some investments in the adaptation part as well. Is that sort of a trend that will be growing from now on, or how do you see that?
Yeah, I think the challenge with adaptation is definition of success. Right? So with mitigation, we've all agreed on a North Star. It's CO2 equivalent. So reducing greenhouse gas emissions and electrifying and transitioning to different types of energy sources to mitigate CO2. In adaptation, the definition of the North Star gets a bit harder. What is actual success? Is it less floods, less fires, less deaths, less economic damage? So coalescing around an agreement on what is actually success. By the way, if we succeed in mitigation, some people would argue we don't need adaptation. And I disagree with that. I think we already tipped certain parts of the planetary boundaries. We will need to start adapting. I mean, the hurricane season in the US being a great proof, right? A hurricane that actually went into France just a couple of weeks ago. So how do we start thinking about adaptation? And now the question then is, what is venture backable in adaptation versus what looks more like infrastructure? Sea barriers being built, Venice building this massive hydraulic system to actually block waters, London really being dependent on the Thames barrier already. Those are big infrastructure projects. So on the adaptation front, I think that there's already some movement. We've actually have a couple of adaptation investments already we can talk about later. And there is an increasing belief that there's solutions that need to be identified, back scaled. But my argument is that we should be doing a lot more of that. 6% of all venture capital dollars going into adaptation is not enough. Actually, overall, $1.5 trillion going into adaptation when certain analysis would say we need like $3.8 trillion being spent every single year on adaptation.
Yeah, maybe just on that second, the last part you say here, because I've also seen quite a lot of numbers about sort of the financing gap, and I think financing gap is there both on mitigation and probably adaptation as well. But is venture really the right solution then? Because I mean, as you know, most funds are maybe in climate are maybe 200, 300 million euro funds. We're far from the $1 trillion gap, right? Like how do you match that? How is that going to work?
Yeah, I mean, in mitigation or adaptation, you need to scale out solutions to the point where they actually, different types of asset class, private equity, infrastructure can come in and make and distribute them broadly. So let's go to the example that we've been, one of the examples of the investments that we made in adaptation. The planet has a massive cooling problem. As the world heats, the human body cannot survive in the combination of humidity and temperature that we're seeing in different parts of the world. So the human body cannot survive in Pakistan when the humidity does not allow the body to actually perspire, and therefore you can't cool yourself. You literally boil from the inside. So we're going to need to deploy billions of units of air conditioners to keep people alive, not just comfortable. The problem is that the cooling solution that we have today was invented by Mr. Carrier in, I believe, 1902. Like, we haven't innovated on top of that architecture ever since. It's energy inefficient. It uses these really nasty refrigerants, 3,000 times worse than CO2. They last for a long time. So we need to innovate around cooling. So we did a deep dive on cooling, 2 years ago? Got freaked out by the enormity of the scale, because if we ship the architecture that we have today, our current grid cannot support it. Like the IEA report that just came out talked about, everybody's talking about data centers. The biggest growth of demand driver in the coming years is actually cooling. Very few people actually start realizing that we need to innovate. So we scoured the market for innovation around cooling. Honestly, not a lot out there. Ended up finding a company in Florida in the US called Blue Frontier that's 90% more efficient than what it's replacing, and is now shipping units into different facilities, commercial buildings primarily in the US. So our role was to find that, get it out of the lab, get it out into the market. The next stage will be for some financial partner to come in and actually finance a SPV so that they can deploy in a OpEx rather than CapEx model at scale, right? Thousands and thousands of buildings, swapping out their existing cooling infrastructure, putting in something more efficient. And by the way, getting the price point of that solution affordable enough so we can deploy it in Pakistan, India, all these megacities of the world that are under intense threat of humidity and heat. Venture capital absolutely plays a role in actually scaling out the innovation and then making it bankable for others to step in.
Sort of one of the issues in climate adaptation potentially is sort of the difference between the global north and the global south, and sort of where the money is to be able to pay for these solutions. How have you seen that? Because I think this is maybe one where you're able to get it so cheap that it's going to work in both parts of the world. But there's definitely some issues in the global south that maybe are not able, or that we're not able to solve, or that will be too expensive to solve.
Correct. And actually, we have to spend a lot of time thinking about that as well. Like what needs to happen for this to be better and cheaper than what it's replacing. The developer in Lagos, Nigeria is not going to choose lower embodied carbon concrete because it's green. He's going to choose it because it's better and cheaper. So as we evaluate technologies, we constantly think about that. Let me give you an example of a company that we invested in called Carbon Cure. It injects CO2 into concrete as it's being mixed. It makes the concrete stronger, so you need less cement. So it's a double benefit. One, it sequesters the concrete. Two, you need less cement. What we loved about it is that it's a very low CapEx cost, and it's a cost saving. Their sales an ROI basis. Use us, and you'll need less of your most expensive input, cement. So you'll increase your very thin margins. Oh, and by the way, you're now selling green cement. Carbon Cure is now live in every single continent in the world, including Africa. Right. So it's been driven by an economic choice. And by the way, it's just as strong, which in some cases stronger. It's good, it's cheaper, and it's better. And it has sustainability effects. So we need to definitely identify solutions that at scale can actually be cost parity. Is that going to be achievable with everything? No. So what role could organizations like the IFC or the World Bank play in actually helping to deploy these solutions, absorbing the green premium? Earth 2150 is focused on the urban environment. The urban centers of the future have yet to be built, and many of them, the megacities, are going to be built in the global south. So we have this one chance to do a leapfrog to make sure that those cities get built efficiently, resiliently, and sustainably.
Super interesting. And I think maybe a question then, when we're moving more from mitigation to adaptation potentially, are there any things you need to think differently about in terms of sort of criteria of an investment, could be financing or other things, or more like, do we move more deep tech, or what sort of the changes in perspective?
One of the challenges with adaptation is who the client might be, i.e. it might be a city, it might be a nation state. So you're now moving from B2B to B2G, and that comes with other challenges, right? So the sales cycle, the funding. So that is, I think, a different sales motion that you have to consider when you're talking about adaptation. Let's talk about another area of concern around adaptation: water. We know we have a global issue. We're consuming 40% more water than we're replenishing. The problem is water is a mispriced asset. Where we have water, London today and its rain, is not where we need the water the most. There's a bunch of solutions out there already, desalination plants, et cetera, that look like infrastructure. And there's some massive companies that Israel leads in a lot of these solutions. There's some massive companies already focused on water. The challenge that we've had is thinking about what type of solutions are venture backable in the water space. There's technologies that actually suck humidity out of the air. They actually supposedly even work in the desert. Is that really venture backable? There's solutions that actually acoustically monitor leaks in buildings. Pretty cool, but it feels fairly commoditized. So we've been going through like all these different types of solutions around water to try to figure it out. One area that we've focused on quite a bit is actually being able to reuse our water, the water that's already available, and the realization the water is already available is massively contaminated with these microplastics, PFAS. So an area that we're exploring is potentially PFAS monitoring or remediation to be able to have more reuse the water that we do have. So it applies to all the different problems we've looked at across adaptation. It's what's the problem, what's going to get solved by infra, what areas of solutions still need innovation, where can venture capital play, and then what can scale into large enough typical VC metrics. So TAM size, buyer, price, profitability long-term, and then why is it?
Yeah, and then sort of the saying whether it's venture baggable or not, is that then okay, we need a big enough TAM, we need to make sure clients are ready to buy, and also how do you sort of make sure that infra players will be able to take those solutions afterwards and actually make it work? What's the things you think about here?
Yeah, so we spend a fair amount of time talking to industry to understand what would need to be true for you to adopt this. Whether that's a company in the Middle East called Matito, who just specializes in water, whether it's large owners of buildings, whether it's mayors, and evaluate, okay, today it's way too expensive, right? It's first of a kind, nth of a kind. There's no way you're going to pay the full price for this thing. But what would the right price be for the right benefit? Oh, and by the way, we showed up with financing, so you didn't have to pay out of pocket, but instead you actually had an ability to lease it. What would the right price point be? And then multiply that one conversation times enough of them to understand that, yes, there is a willing buyer's market for the solution if this and this and this happen.
Makes sense. And are there any sort of issues with climate adaptation as a whole, as sort of a new type of vertical within venture where you're seeing this doesn't really work, or where it's harder to do than other types of investments?
So I think the challenge is the framing of the problem, where, yes, people realize that Miami is probably going to be underwater. Insurance is already priced into that because of hurricanes. And honestly, you can't get insurance in your home in Florida, right? So the government has to step in and solve that. The knock-on effects of adaptation and the financial risk still needs to be addressed. So, for example, your factory is not in a floodplain. There's a bunch of software that can tell you that. That means you can get insurance. Great. However, the power plant that's 5 miles down the road that actually supplies the power to your factory is in the floodplain. If that gets flooded, factory will not be able to run. That has quantifiable economic value that you need to take into account, that the insurer needs to take into account. That linkage of interdependencies in supply chain, energy, and the implied financial risks are not being accounted for. And therefore, people can't compute why they need to drive these adaptation solutions. Be that, and by people, I mean the factory owner or the local government. So we've been looking at a couple of software providers that actually look at that kind of interconnected adaptation risk.
Yeah, and then climate risk and sort of the insurance part, is that part of adaptation, or how does that actually fit into that category?
Yeah, I think to take action, you need to measure it and then figure out, are you doing something better? So starting with the climate risk, understanding your supply chains and your exposure to that climate risk. Was it 2 summers ago? There was these pictures of like literally strawberries drying up on the vines and no strawberries making it to the UK. Like, we are already massively exposed in our daily lives to the supply chain climate adaptation risk. That has economic value. So quantifying the economic value, that's the baseline. And then figure out the actions you can take to mitigate that. You at an individual level, you at a corporate level, you at a national level. Even on an adaptation perspective, we've been thinking a lot about, I call it bringing proteins closer to humans. We need to feed a growing amount of urban population, or supply chains are risk exposed. How do we start making food closer to cities? Is that alternative proteins? Is that mycelium? Is that hyper efficient robot powered greenhouses like you see all over the Netherlands? I don't know, but I do think that is an adaptation area as well that we as venture capitalists are exploring.
I think that sort of gives a good view on what's next in adaptation and what's happening already. Maybe because we're also saying that adaptation is sort of potentially a next step after we've done a lot of mitigation. Maybe a question is it too late to do climate mitigation now, or do we still have a lot of work to do there?
Absolutely not. I think that needs to be the core message, right? We need to do both mitigation and adaptation. Unless we continue to mitigate CO2 emissions, more and more bad stuff will continue to happen. Right? There's this framework called the Planetary Boundaries. It's done by a Swedish research institute. There's 9 of them. Last year, we had already passed 6. A couple of weeks ago, we passed the 7th. The problem with planetary boundaries is the assumption is that once we pass them, we can't come back. If you thought we were screwed, we are more screwed than you thought. So no, we need to continue our efforts around mitigation and doing it at scale, right? One giant CO2 sucking plant in Iceland is nice and it gets a lot of press. We need that at industrial scale, like literally industrial cities sucking down CO2, transition away from fossil fuels, acceleration of deployment of renewables, transitions to EVs. Yes, flying less, yes, eating less meat, but really driving the transformation of our industries to mitigate the CO2 emissions. In parallel to that, we need to focus on adaptation. So no, nobody should walk away from this thinking that we're done on mitigation. We will likely, actually, I would even put money on it. We will not hit our 2030 targets on mitigation. There's no way, right? We need to reduce 20-something gigatons of CO2 emissions. Not going to happen. But every single 0.1 degree of increased temperature rise has these pretty bad effects. We published a report called Climate 101 last year. It's on our website. It has a whole section on what happens if we're at 1.6, 1.8, 2, 2.5. And so, yes, every single degree that we can help lower will have a positive effect.
You're putting yourself a little bit out there saying we're not hitting the 2030 goal, but it's probably realistic enough. So yeah. But actually, you're also talking to an interesting part of mitigation, which is sort of how much do we reduce consumption? You say fly less, eat less meat, etc. And how much do we sort of create solutions that allow us to live pretty much the same life we're doing today? Is that an approach you take into sort of your investments and do you have a preference, something that gives us more towards one or the other?
First of all, I definitely do not want to be labeled as a degrowther. Actually, the reason I do what I do, right, is I'm a pure capitalist. I believe that this transformation of our economy, of our industries, of our transportation is going to be one of the greatest wealth accumulation opportunities in history. And I'm backing the tools for the battle ahead and the belief that those tools will need to be deployed at scale. And that will generate financial returns and positive societal benefits. My point that I was making on flying and meat, it's probably the 2 single actions that an individual can take that can have the greatest effect. I go talk to my kids' schools and I give a presentation on climate change and I ask them, what can you do to have an impact? And they all raise their hands, little kids, and they say, recycle. I'm like, try again. Eat less meat. Well, yeah, that matters. Everybody needs to eat less meat or at least not waste food. The garbage that you throw out actually has more of an effect from the methane perspective in the short term. The one thing you can do is build less with concrete. And they all are surprised. And I show them a graph that shows the emissions by different sectors. And they walk away realizing that, yes, flying less, yes, eating less meat matters. What really matters is a global addiction to cement, concrete, and steel. And the fact that that's not going to slow down as we continue to build. The embodied carbon is 15% between steel and cement. It would be the 3rd largest emitter if it was a country after the US and China. So it's actually making people realize what actually moves the needle. You can feel really good about driving your Tesla, but by the way, unless you drive it for 6 years, you're actually negative on the carbon before you start becoming positive.
I think that's a good reminder. And it's something everybody forgets, right? Because it's also super hard to completely understand sort of where do you reduce your emissions the most. Or at least it's a process where you need to put yourself in there and understand things before you really get it. But maybe everybody should read the Climate 101, then we would know.
Yeah, put it on the podcast note.
Yeah, deal. But maybe a question as well though is that also when you read reports from IPCC, a lot of some of the points that are made are also that most of the tech to reach our 2030 climate targets already exist, and then when we're building more towards 2050 now, how do you see that?
Yeah, so I wrote a blog post 4 years ago as I was going through my own climate voyage with exactly that point. For me, it was speed and scale. We're going to have the fastest impact as broadly as possible. And the IEA has a dashboard of solutions, potential impact in the gigaton level, and readiness level, like what's ready to deploy. So if you sort by potential impact and readiness level, i.e. ready to deploy now, the top 10 solutions were all in the built environment. Trust me, if you told me 10 years ago that I was going to be focusing on lower embodied carbon concrete or the importance of highly efficient windows, those are not exactly sexy venture capital areas, right? But those are the ones that are ready to deploy today and can have the greatest possible impact. And yes, they exist. So our job is to get them scaled out as fast as possible, which is why we invest in Series A and B. It's about deployment. It's about getting into as many possible deployments as quickly as possible, started having the impact. And by the way, the impact is cumulative. That CO2 that solution mitigates for the first year, then compounds with what it mitigates the second year, the third year, the fourth year. So the sooner you get it out, the greater value it has. There's a concept called the time value of carbon. If you deploy today, the compounding effect is much greater than if you deploy some amazing sci-fi thing in 10 years' time.
Is there a point where we need to stop doing climate mitigation? I guess if we reach net zero by 2050, but maybe even a couple of years before, it doesn't really make sense to continue if it's all about deploying.
And let's be clear, we are still going to be using fossil fuels to power parts of our economy. What is likely to happen is that we will actually reach a peak use as we start increasing other sources of energy. So yes, we will still be emitting greenhouse gases in different forms, from our farms, from our trash, from our coal mines, that we will still be using in decades to come. And we will continue to need to mitigate those emissions as we transition to different forms of manufacturing, to electrification, to different sources of energy. So no, I don't think, unfortunately, this is we get to 2050, check the box, we're done. It will be a continued effort over time.
But let me try to push it a little bit here. Then, do you think there's a day where you'll only do climate adaptation deals and no more mitigation deals at 2150?
Probably not in my lifetime.
Fair, yeah.
I think my point, there's a reason why it's called 2150, right? So it's there's 2050 is not that far away. We need to think about how we make the world 2150 a reality, and that requires a much longer thought pattern. If you go to our website, we have a counter on how many seconds, days, years we have until 2150.
Yeah, okay, fair. No, I just wanted to check, but it sounds like we still have many years in front of us then. But maybe just rounding up a little bit the climate mitigation against adaptation. Are there any other sort of key takeaways that you would think about if you were talking to another impact VC or climate tech investor about, or a generalist as well, considering investing in climate? What would be sort of the takeaways that you would bring?
That climate adaptation is a good ROI. So Bill Gates and Ban Ki-moon wrote a paper 3 years ago on the economics of climate adaptation. I can't remember the ratio off the top of my head, but I think it was in this range. It was something like 1 trillion yen to climate adaptation will generate 3 trillion of economic value. So the business of adaptation is actually a good business. I'm part of a working group for the World Economic Forum that's trying to bring together innovators, nation states, small islands, banks, talk about the funding and business of adaptation. And it's, everybody, that group is self-selected. So we all agree it's a good business. Then the question becomes how.
But there's definitely value to get. That's the message to get across. I think now I would love to talk a little bit more about you and your journey, both sort of what's your story and also how did you end up co-founding 2150 and get this clear view on climate?
It's been a long, windy road, right? So I'm a geek from a young age. Started coding on my dad's Commodore 64 at age 12. Trying to hide that geekness by studying economics in school. But luckily, I was still a geek, so I was still doing computer science, launching websites back in 93, 94. And that led to a career in technology. So starting with databases in the 90s, the smartphones at Microsoft, smart apps at Google, and then like buttons at Facebook. And through that, got exposed to this burgeoning ecosystem of startups. I love the fact that I now pitch the family offices of founders that I was helping when I was at Facebook to invest into my fund. Right, there's been an amazing amount of success in the European ecosystem, and I wanted to be part of that. So I became a VC, launched my own fund back in 2013, and I was there for almost 6 years. And then I had I call it my midlife crisis. I went to an exec ed program at Princeton, paid for by the World Economic Forum. I was climate curious, and I came away scared and excited. Scared because as you start going into climate and start realizing that, yes, driving your Tesla makes you feel good, but it has a negative impact. What you need to mitigate is all these really hard to abate industries, all at the same time, all at amazing speed. And I was like, oh crap, that is much deeper than I thought. And then excited, having met a number of founders of, at that point, clean tech companies that were seeking to scale. And I'm like, wait, I could do the day job that I love, partner up with amazing, brilliant founders, but I could be backing deep tech solutions like these that if they scale can have a massive economic, but also societal impact. I want to go do that. And then that led down to about a year of exploration around what I talked about earlier, the speed and scale filter, right? Like where can I have the greatest amount of focus? The realization that dollars in venture were being misallocated. 50% of dollars in venture back then in 2018 were being allocated into mobility. EV, scooters, transportation is 13% of emissions. 50% of emissions, which is cities, buildings, and the industries that power the cities, is 50% of emissions. And back then that was getting like 10% of venture capital funding. So big problem, not a lot of capital flowing into it. Solutions available that could be scaled today. Need for a Series A, Series B fund because that was a big gap. And that was the vision with which we founded 2150. Luckily, we managed to convince a fair amount of people with a lot of money to buy into that vision. And so we raised the fund during COVID, actually, in slightly over a year and a week, to be exact.
Pretty impressive. And also it seems like you've been through a lot. Maybe just a question, actually, now I'm going a little bit back to the climate side. Sorry for that. But I think there's also, it's an interesting discussion about sort of the underfunded sectors in climate. Some people would argue that there's a reason why they're underfunded. It's because maybe it's harder to find venture-backed solutions in those, or it's less of a venture question. How do you see that? Because, I mean, naturally, when you think underfunded, you think, okay, then if you fund there, you'll probably get more value creation in the end, right?
So I think it's underfunded because people might not realize the enormity of the problem in some of those spaces. So, and so we're quite thematic in while we do these deep dives on problem sets. So cooling that we did 3 years ago, there really was not that much innovation, and there was not that many people looking at cooling solutions. It might be the heat waves in the US, but all of a sudden my cooling company gets featured in everything, Wall Street Journal, MIT Tech Review, MSNBC, because if you Google sustainable cooling, there's not that many. So Windows, which is, like I said, not exactly a sexy venture capital model, windows are a huge problem. 25% of heat and cooling energy loss happens through leaky windows. So we spent about a year looking for innovation in the Windows space, found a repeat glass entrepreneur, 62-year-old founder who'd done it before, working on this literally magical Windows technology that is 3 times more efficient than triple pane, but at the cost of double pane. And he's now scaling out a factory in Michigan. The governor showed up to open it. Bill Gates featured it in his latest letter, literally the breakthrough impact report. In his opening letter, Bill Gates talked about that specific company. So finding these niche spaces that are not so niche, they're actually quite massive, where there needs to be more innovation.
I think it's one of the most niche type of founders I've ever heard. A repeat glass entrepreneur, but it's pretty cool, pretty well founded.
Go look at Corning Glass, which is a publicly listed company, and look at their profitability margins. Glass is insane.
Okay, I'll take a look, and I can also maybe link it in the show notes as well. But maybe you should rebrand yourself as the unsexy VC fund. That could also, if 2150 at some point becomes boring, then you always have an alternative.
I'm a balding middle-aged guy, you know. It fits the bill.
But I think maybe going back to sort of your life story a little bit, I jumped out here just because I think climate is of course super interesting. We also preparing a little bit for this. I asked sort of what's the philosophy and the life learnings that have guided you through this, because as you say, you were on the tech side, then VC side, and then you changed within the VC side. And you mentioned something about a poster in Croatia. What's the story behind that?
Yeah, so my then girlfriend in college had gone to Croatia during the conflict to help with refugee education. So I decided to go. I remember the consul at the Croatian embassy being like, "Why do you want to go to Croatia?" And I went to this island called Hvar, which is now really popular. And I saw this poster that still sits in my room that says a Latin phrase, navigare necesse est. And it's a famous phrase that Pompey said to his troops when they wouldn't sail because there was a storm. I tweaked that a bit in my own kind of personal way, and it's become like, since that was it. I mean, by that point I was like 21. So I was 21 to become like my mantra. The idea of navigating through life, like you're going to encounter storms, you're going to go off course, have a general idea of where the final destination is, and then keep a tack on the steering wheel to make sure. I mean, by definition, a sailboat can never go straight, right? It has to tack over and over again. So know that the voyage will never be a straight line. You will always have to tack, and you always have externalities. So make sure to at least remember where the final destination is. I actually talked about that with my now wife on our first official date around what the general destination I thought would be.
That's a philosophical first date, but at least it went well. So that's super nice. Maybe then what has been the last thing you sort of changed your mind on? Because I think when you're doing this sort of tagging back and forth, then at some point it also means that you've got to change your mind a little bit and got to update a little bit your way of viewing life.
Yeah, I mean, there are some things I'm hard-headed about, but probably the realization that while we should all be in this battle together, we are massively polarized, right? So to put that in context, we don't solve climate change without China, period. They're the largest emitter. They have the second largest economy. They have the ability to actually develop and deploy solutions, as we're seeing now with EVs, at a scale that is unmatched. So geopolitics are not driving collaboration with China. I think I give John Kerry a lot of credit for, despite the rhetoric, spending a lot of time on trying to work closely with them. Even inside countries, right? The polarization across political spectrums and the culture wars that have emerged around climate change. And like the communities that got impacted by the hurricanes a couple of weeks ago, probably Republican leaning. So the impact is real. On the flip side of that, the irony is that the majority of the factories being built funded by the IRA, which everybody on the right wants to kill, are mostly in right-leaning states or communities. So there's a benefit to that. So the polarization down to a very local level around what's happening around us and the misinformation that's out there. So my hope, belief that we could all coalesce around it, which I think was a global feeling coming out of the Paris Accords, is perhaps unfounded.
Yeah, and do you feel like we can still change that, or do you feel like the narrative is just changing, has gone so polarized that it's hard, at least as an individual, to change that much about it?
I mean, I think the problem is the belief in science, right? Or in the case of Brexit, the belief in experts, that you see something in the news that happened in Pakistan and it doesn't really affect you. Or you hear about a hurricane that just ripped through a community and literally all the way inland in North Carolina. And instead of perhaps accepting that temperature rises might have led to stronger and more frequent hurricanes, there's this meme that appears around the government controlling weather, like WTF. So coming back from this polarization on all sides is going to take a while. I do think that certain countries, including the UK, have taken on leadership roles. I mean, the UK is a small island nation, right? But it could be a leader in some of these solutions that others can deploy. India, at their scale, right? If India were to actually aggressively push towards decarbonization, that has a massive effect on the planet. It's the world's largest democracy. So how can individual countries take leadership roles? You're in Denmark, right? Denmark's taken a very active role in this and created a massive economic value. Ørsted being one, Copenhagen Infrastructure Partners, global companies that have actually had a massive positive impact on the world coming from a fairly small country.
But then maybe as a fund or as a VC, how does polarization affect you? Would you, for example, make a deal in China? I don't know if China is within your scope, but how do you sort of do that when you're based in a Western country where it might be more complicated?
Yeah, so I mean, most of our investments are in North America and Europe. Just that's where the innovation is happening. I know stuff is happening in China. I just don't know what it is. I mean, I can see some of it externally, right? Global domination around PVs, global domination around lithium. scaling out of electric vehicles. There's actually a BYD dealership right down the street here in London. That I see. What I don't know is what else is going on behind the scenes. And I'd love to go do a tour and understand what's there. I published a blog post recently about if you know a war is coming, wouldn't you want to be the peddler of weapons? And so if we know there's a war coming around climate change, and we're going to need all these weapons, wouldn't you want to start innovating on them and be the global supplier of those weapons? Sounds like a pretty good industrial strategy to me. But then we have invested in Brazil, for example, in a very specific problem in emerging markets. Emerging markets. So if you visually think about Lagos or Mumbai or Vietnam, you probably have an image of tuk-tuks and mopeds around you. 2 and 3 wheelers are the fastest rising category of mobility in emerging markets. Many of those are either old, they get sold multiple times and running on diesel, and really, really bad, both for diesel consumption, but also for air pollution, because they don't have catalytic converters. So they're about 11 times worse than a car. China is massively electrifying. They're exporting into Vietnam. India, you have electric tuk-tuks with replaceable batteries. Brazil, where there is 1 million what are called motoboys, these guys who run the economy. So in Sao Paulo, you'll get to a stoplight, you'll be surrounded by 50 scooters. These guys deliver your paycheck, your food. They literally run the economy because of the traffic jams. Sao Paulo alone has about 300,000 of them. They're all riding these scooters 10 hours a day, 7 days a week on diesel. And by the way, Brazil has a very, very low electrification acquisition rate for bikes. So that was a problem that we identified that was very specific to emerging markets. And then we met a company called Vammo, founded by 2 Americans, that takes Chinese scooters, modifies them so that the battery is swappable, and leases them out to the motorboys at a lower price than the old bike plus diesel. And they have battery swapping stations all around Sao Paulo. So the guy can keep on doing their job, swap the battery, keep on going. It's cooler because it's a new bike. It's faster because it's electric. You're not inhaling smoke all the time. And by the way, their clients, so the local food delivery companies, et cetera, want to drive electrification. So they're providing you incentives to go get that electric bike. So yeah, that was our first kind of emerging market problem and solution that we backed. But the rest of the time we spend trying to figure out how to get our solutions from the US or the UK or Denmark down into the global south.
And how do you find these this one emerging solution, at least, and probably the next one that might come? Is that because also just as we both know in venture, there's a good chance that you find your deals through either network or people that are within sort of your sphere. It's much harder to do it out of your sphere.
Yes and no. Because we do these deep dives, we actually look globally for solutions. 2/3 of our Fund 1 portfolio came from deep dives. In some cases, direct outbound. In the case of the scooter problem, it's something we looked at. We looked at a company doing that in Kenya. We looked at one in India. So we knew the problem. The secret network that found us this company is my small country of El Salvador. Turns out that Billy, a co-founder, used to be at Uber, used to be at Tesla, was married to a Salvadorian who's friends with my cousin, who also used to be at Uber, who introduced us before he even founded this company. And so we got to know each other. And then he sent me the deck. He's like, by the way, I'm leaving Tesla at that point. I'm going to go start this. Let's stay in touch.
Pretty crazy.
It all goes back to El Salvador. I can tell you any story in the world and link it back to El Salvador.
Pretty crazy. But yeah, then I guess there was a way in either way, even though it's hard. But that's pretty cool. I think super nice reflections on this. And I think both sort of the personal journey to get into climate and also the reflections on climate. If you were to talk with a generalist investor considering going into impact/climate, what would be the main thing you would tell them, or the main learning that you would share with them?
I think we touched on it already, but it's just explain to them the economic opportunity ahead. My friends at Excel or Index are fairly capitalistic. So just explain to them how we are already reinventing supply chains, economies, manufacturing methods, how this will be the greatest value creation period in history, because we will need to do it on a global scale, how the mobilization of private capital combined with public capital to deploy these, how, yes, there will be software-only AI models that help make things more efficient, but you also need hardware. So physical things that are better replacing physical things that are bad. And appeal to their capitalistic instincts.
Yeah, I think that's the true nature of VC, right? You got to prove that that's where the money is, then people will start flocking.
Yes, I could also say we're a bunch of lemmings who get excited about the new shiny objects, whatever they may be, right? So how many food delivery, 5-minute food delivery apps do you really need on your phone?
Very true, but at least sometimes it's the right one. So then it's a good one. and maybe to round it off a little bit as well, if you had to give a tip for other climate tech or impact investors, what would that be?
Come to us for deep dives. Like we do a lot of work getting smart about the problem sets, and we share quite openly. Right? My cooling solution might not be the one that wins. We might need to back a dozen different solutions for one of them to win, or maybe we need to deploy all 12 at the same time at scale. We do the work around the knowledge creation. We write blog posts about it. We talk about it in podcasts. Yeah, just hit us up to discuss them. And if you're doing your own deep dive, know that we've already done the hard work and maybe we can compare notes. Already pretty openly with a bunch of our peers, but the invitation is open to anybody out there.
And we're very happy that you're sharing in podcast as well. Super appreciate that. That's super nice. But thank you so much for joining, Christian. It was a lovely chat, and I think super interesting and a lot of learnings in what you were sharing.
Thanks for making time, and thanks for the series again.
Here's a few words from our beloved sponsor. Impact VC is a global community of VCs accelerating impact within venture. Their purpose is to cultivate a community and resources to unlock venture capital's ability to tackle the world's most pressing challenges. The community is made up of over 900 VCs, including both pioneers and newcomers, including generalist VCs and impact specialists. Visit impactvc.co to join the community and explore their resources, including the VC Impact Playbook, the Founder Impact Playbook, and the Impact Investing for VCs online training, which is designed to help VCs integrate impact practices into their investment strategies.
It's a lot of information to get in 30 seconds.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.